Hi, this is Joe Rabil with Invest Like a Pro. I wanted to spend a little time and give another example of multiple time frame analysis on a long trade. I'm starting with a weekly chart of Starbucks, and I wanted to point out a few things both on the higher time frame and then some of the things on the lower time frame. So first of all, this is the higher time frame. In other words, this is the time frame that where I am looking and I'm making a decision to make a trade. This is the trend time frame. This is the time frame that I'm going and saying, okay, I have a pattern that I really like, and I want to go trade this. So I'm looking at this pattern here, really late 2018, where you broke out of this base area, had really good momentum characteristics in terms of the price action, making a nice move. I've got the ADX down here. This shows where, and I've in other videos and in my book, I describe ADX and how I'm looking at this. But one of the important things is as this moves up and then starts to pull back towards its 18 MA on the weekly chart, notice how the ADX line holds above the 25. This is the gray line going across here. That holds above 25 throughout this entire correction on this pullback. You don't have to have that, but the ones that do that tend to be the strongest trends. If you show good strength to the upside and you go through a full correction and the correction doesn't cause the ADX to drop down under 25, this is a pretty powerful trend. So I really like to look for that on these type of patterns. So you got a really nice breakout. It did bleed back through the high of 2017. So a lot of people look at this and say, hey, this broke out and then it failed because it didn't hold above this peak. I don't have a problem with it bleeding back a little bit, especially if it's working its way back towards the 18-month moving average, 18-week moving average. In addition to that, it's showing really good momentum characteristics. So that's the starting point for me. I'm looking at that and saying, okay, I see this pullback. I want to now go down as this works its way down towards the 18-week. I am now going to go down towards on the daily chart. And see if I can get a tighter entry, a more timely entry, rather than just buying right on the 18 and not having a stop in place, or waiting for this to turn up here and buying it up in this area, and maybe the risk reward and having to put a stop way down here. Maybe there's a way on a lower time frame that I can get in with a little bit less risk and maybe a little bit more timely. And certainly have a little bit more confidence that the trend is turning back up. So I actually have already pulled this back. So this pullback is this pullback here. This is the same. This is the same time frame. These lower highs and lower lows on this time frame are the simple pullback on the weekly chart. So a few things I wanted to point out. If I look at, I'm just going to pull up the ADX, and I want to show you the other side of ADX. So on one side, on the higher time frame, I like to look for a lot of strength. I want to see a powerful move, and on a pullback, I like to see it hold. And then on the other side of the equation, when you're going through a correction, I actually want to see it to be very weak relative to the peak. So here's the strength of the up move. This big, huge move to the upside. And then as price is pulling back, I'm trying to gauge how strong is the decline. Is this a really violent and powerful decline? Or is it not as strong as the stock was when it was going up? And if I look at ADX, I can see a really powerful move based on the green, which is based on the buyers. And then on the decline, I can see red is taking over, but it's nowhere near as strong as green was. So this gives me a lot of confidence that I can go and look for some trigger mechanisms on this time frame, because my bias is to the upside based on the fact that this ADX is saying this just isn't that strong. This decline just isn't that strong. So I want to go back and look at MACD. So what we're looking for, and this is straight out of my book, we're looking for a pattern where you get the opposing trend, right? So your trend to the upside is this way. This is the trend you want to play. You want to play the trend going up. The 18 is above the 40 and both lines are rising. And, pretty strong trend, obviously based on ADX, but also you can see based on the moving averages. But when you're at this point, you might not know that yet. So I'm looking at this and saying, okay, I know I have an uptrend in place. I am now looking for a opposing trend, which would be when the 18 is below the 40. And we're working our way down and price moves in the zone and then comes out of the zone. As I've suggested in other videos, this is kind of important. Now, what I want you to look for here is once it goes in the zone and comes out, does it go to a new low and does it keep trending to the downside? In this case, it doesn't. All it does is really have a down day or two, makes a higher low. And then as this starts turning back around and getting back above the 18, I'm going to start getting very, very interested in, especially knowing the strength of this time frame. I am definitely going to be more on the aggressive side as this comes up through 64, maybe takes out this area of 4 to 5 bars to the upside. And then I'm also going to see where the MACD is crossing over, which is right in this same range. So I might not necessarily wait for a break of the 40 in this situation because I know I've got to move in the zone and to move out of the zone, and it had no follow through whatsoever. This just couldn't go to I mean, if this would have dropped down to 60 even, it would have probably given me pause when it came back up. I might not have wanted to just jump right back in. And I think what I'd be looking for is this pattern where you go in the zone and instead of going to new lows, you fail. You go down, you make a higher low, and then it's a sell signal that fails, which is right out of my book. And as this turns up, and MACD is giving you a slight edge here to get in maybe before the break of the 40, you can get in on this trend at a pretty good level because it's very late in this correction. You didn't have to buy on the first week down or the second week or the third week. You're basically getting in right as this new year, right around 2019 is starting to kick in. It's telling you, it's pretty timely. So, and then you get the benefit of immediate follow through. I mean, you had to deal with a little bit of volatility at the start of the trend, but that's why I don't like putting stops too tight. I would probably be back below this last bottom or below this bottom here to give it a little bit more breathing room. I don't necessarily want to use the moving average. I've mentioned this in other videos. You can get kind of just nicked out using the moving averages sometimes. I like to go back and look for the last price point, and that'll usually be my backstop for a stop point. So this kind of puts it all together. You've got the upper time frame, the higher time frame breaking out of a base, pulling back to support, showing good momentum characteristics. You've got the pullback on the lower time frame showing weak momentum characteristics. And then you get a pretty timely and helpful additional trigger from your MACD as price is giving you also a very important buy signal. So these are the types of combinations we want to continue to look for and take advantage of as time goes on.